All right, let's jump right into this explainer. I want you to imagine two different traders. They're looking at the exact same stock, on the exact same chart, on the exact same day. Yet when the closing bell rings, one of them walks away with a massive profit, and the other, well, they've completely blown their entire account. So how does that even happen? Believe it or not, it all comes down to one single, incredibly overlooked factor.
So why do traders lose money despite having what looks like the absolute perfect strategy? I mean, we've all been there, right? Endlessly hunting for that mythical 99% accuracy setup. But here's the reality check. The secret isn't the strategy itself. It's actually the specific time frame you're watching. That time frame literally dictates whether you're seeing the actual, overarching truth of the market's direction, or if you're just getting completely lost in the daily noise.
Okay, so here is our roadmap for today. We're going to start with the intraday trading trap and the 1-minute chart illusion. Then we'll uncover the pro time frame and the market's golden hours. After that, we'll dive into the psychology of trading and finally wrap it all up with the ultimate winning combination. Section 1. The intraday trading trap, or what's known as the morning mirage. Look, if you've ever traded, you know that visceral, stomach-dropping feeling right at the 9:15 a.m. open. Your heart is pounding, your hands are practically shaking over the keyboard, and suddenly every single green candle looks like a desperate call to jump in and make some quick cash. But fast forward to the evening, and your screen is just a sea of red.
That agonizing roller coaster usually happens because of market noise. We're talking about those minor price movements, the false breakouts, and those sudden erratic spikes that completely deceive you. They create this completely false sense of excitement, right? You think a massive trend is kicking off, you buy in, and then bam, the market immediately reverses and triggers your stop loss. This noise is the absolute #1 trap that just eats up beginner capital.
Moving right along to Section 2, the 1-minute chart illusion, a trap for beginners. So the 1-minute chart actively feeds you all of this market noise. It just bombards you with signals, basically turning your brain into a stressed-out, highly reactive machine that's trying to process way too many fake moves. Suddenly, every minor tick feels like a major, world-ending event, which completely clouds your rational judgment.
There's this really profound realization from one of our sources. A professional trader was asked why their win rate was just so remarkably high, and they said, "I don't listen to market noise, I listen to the trend." And honestly, that really hits the nail on the head. True pros just tune out those chaotic 1-minute fluctuations entirely. They literally aren't interested in the noise. They're hunting for real, sustained direction.
Which brings us to Section 3, the pro time frame, 5 and 15-minute charts. If that 1-minute chart is a trap, the actual solution lies in the medium time frames. Specifically, it's the 5-minute and 15-minute charts where the real, undeniable trends and the actual footprints of big institutional operators finally emerge from all that chaos.
It's honestly a night and day difference in how amateurs and pros behave. Amateurs are out there frantically chasing running candles on the 1-minute chart, just reacting impulsively to every little twitch in price. Meanwhile, the pros? They sit back like Zen masters. They wait patiently for clear, solid trends to actually develop on the 15-minute chart. They let the market come to them instead of desperately chasing after it.
Section 4. The market's golden hours, timing your trades. Because finding success actually requires a lot more than just picking the right chart. You have to trade at the right time of day. The market isn't just some static, unchanging machine. Its mood, its speed, its volatility, it all changes hour by hour. Let's actually map out a typical day. From 9:15 a.m. to 10:15 a.m., that is high volatility and extreme danger. That opening hour is where retail traders get completely trapped by massive institutional repositioning. But from 10:15 a.m. to noon, well, that is your golden window. The morning chaos has finally settled down and clear, reliable trends start showing up on those larger time frames. Then from 12 p.m. onwards, the market often just goes sideways, which is a perfect setup for the trap of overtrading and basically handing all your morning profits right back.
All right, Section 5, the psychology of trading, mind over market. This is where we have to shift our focus from the technical charts to the actual mental battlefield. Because look, even if you know the right time frame and you know the exact right hour to trade, you can still blow your capital in a heartbeat. Why? Because your real enemy isn't the market or the algorithms, it's your own fear, greed, and impatience.
The really harsh reality here is that 90% of traders fail because they treat the market like a casino. They totally succumb to emotional decision-making, always chasing after quick riches. Only about 10% actually succeed, and they do it through absolutely ruthless patience and discipline. At the end of the day, trading isn't just about reading charts. It is entirely about reading yourself.
To really understand what a lack of emotional discipline looks like, consider this raw scenario from our sources. Imagine a trader takes 3 consecutive losses. Now, instead of just walking away and protecting what's left of their account, sheer anger takes over. They lose all self-control. They start firing off revenge trades with absolutely zero setup, driven purely by this burning emotional need to win that money back right then and there. And the result? Within minutes, they've completely doubled their deficit for the day. It's brutal.
Finally, we reach Section 6, the ultimate winning combination, the PRO system. This is our actionable blueprint. We are going to combine timeframes to completely filter out that emotional noise and lock in high-probability, highly disciplined setups.
So, here is exactly how this hierarchy plays out in real time. Step 1. You use the 15-minute chart to dictate your broader trend direction. Is it making higher highs or lower lows? Simple as that. Step 2. You drop down to the 5-minute chart, you wait patiently for a pullback, and you find your precise entry point. And then Step 3. Only if you absolutely need to, you use the 1-minute chart strictly to fine-tune that entry, purely for maximizing your risk-to-reward ratio. You never, ever use the 1-minute chart to find the actual trend.
Look, to actually protect your hard-earned capital, you have to build your foundation on absolute survival rules. Number 1, no trading at the market open. Let the dust settle. Number 2, wait for a clear 15-minute trend to show its face. Number 3, stop trading immediately after 2 consecutive losses. Just walk away. And number 4, remember, you literally do not have to trade every single day. Following these rules forces discipline over emotion, completely transforming your trading from a stressful gamble into a highly structured professional business. Which leaves us with one incredibly important question to ponder. Are you trading the market, or is your mind trading you? To truly succeed out there, you have to stop chasing those quick riches, deeply respect the larger time frames, and cultivate extreme patience before you even think about executing your next trade. Just remember, the market always rewards those who wait. Thank you so much for joining me on this explainer, and I'll see you all next time.